Welcome back. You're watching Deal No Deal on ET Now, a Diwali special edition for all of our viewers where you can write your queries to us and we will pose them to our experts. But this is not the similar one that we do in Buy Now Sell Now. Here, you will have a detailed breakdown of your queries by our experts. On the technicals today, we have Kunal Bothra as always, and on the fundamentals today, we have Mr. G. Chokalingam joining us on the show. Once again, or rather, good morning, Kunal, as well as Mr. Chokalingam. Thank you so much for joining us on ET Now. Mr. Chokalingam, festive greetings to you and your entire team and all at home from the entire team of Buy Now, Sell Now, as well as from the team of ET Now. But let's get started with all the queries that have been coming in, and we've actually posed it to our experts. The first query that I have is coming in from Balan. He wants to know about Ajanta Pharma, FDC, Everest Industries, Bank of Maharashtra. So he has these companies in his portfolio at this point in time, Mr. Chokalingam. For the past 2 weeks, he's been saying that we've all been witnessing a sharp downtick in the mid-cap and the small-cap space. So he wants to know, should he move out of these small-cap players and now look at some large-cap plays instead?
First of all, thank you for your greetings. We at Economics wish entire ET Now team a great Diwali and a great success ahead in capturing a higher market share. Thank you. As far as Ajanta and Bank of Maharashtra, you are right. It's not only this particular investor. The entire investing community is going through a tough time. Of course, those invested in quality mid-cap, small-cap stocks are enjoying. They are more relatively stable. Now, coming specific question on Ajanta, it's a great company, no doubt about it. Even at current price, it is worth holding for long term, no doubt. But in short to medium term, that is within a 1 year time frame, whether investor will make significant money, which I am doubtful. Because if you look at enterprise value, that is sum of market cap and net debt or minus net cash. If you look at that net enterprise value, it is around 8 times annual sales. And basically, this company is focused on generic, branded generic sales. So 8 times is slightly stretched or fairly valued. So therefore, in the short to medium term, I do not see a great opportunity, but long term, definitely it can create some, alpha for the investor. As far as Bank of Maharashtra is concerned, yes, it's a great stock. It is one of the best PSU banks. The only concern is that entire banking industry is going through a lot of headwinds. The industry credit growth is expected to slow down from 16% last year to 12% now. And plus, there are a lot of headwinds in terms of provisions anticipated for expected credit loss, reduction in the credit deposit ratio, competition for deposits, competition for CASA deposit. All these headwinds are there. But the bank remains a great bank. Even in September quarter, it has posted above industry growth in advances and deposits, and also the stock has corrected. Thanks to the correction, now the stock is available at 1.7 times price to adjusted book value, which went up as high as 2.5 times at the peak of the price. So this 1.7 times price to adjusted book value gives a lot of comfort. So definitely this is a good buy for long term. Again, within short term, you may not expect more than 5% return. But if you are willing to hold for 1 to 3 years, I think this is one of the best PSU banks to hold.
Those takes coming in from Mr. Chokalingam on those counters the Balan is invested in. What's your take, Kunal? What he's saying is that he's invested in these small cap, mid cap counters. Given the fact that now you're seeing a downtick in the market, a sharper correction actually in the broader markets, what sort of strategy should he use? Exit out of these companies or go and seal the deal with the large cap players?
And very rarely I'll probably agree with all three of the stocks, and I think all three of these names, Ajanta Pharma, FDC, and as well as the third stock which you're mentioning, I think all three of them are a deal from my side. Now I'll explain the rationale for this. Now this is the charts for Ajanta Pharma on the long-term charts. Now what's interesting about the stock is the fantastic uptrend the stock has been going through. There was this phase in 2010 to 2015 where the stock gave returns in in multiples, not just in terms of percentage gains, but then that led to the inertia uptrend for the stock going forward. So I think even after that strong uptrend from 2010 to 2015, the stock post that went into a consolidation, but that has resulted in the stock getting into a breakout. So bullish on Ajanta Pharma. Looking at the long-term structure in terms of the charts, still as expecting the stock will continue to trend up higher. Now the second chart is very interesting, and that's FDC. Now, stocks which go into zones of, overbought nature on charts on the short-term basis, there comes a phase where, these overbought nature of chart indicators gets, the stock into a zone where the stock consolidates. So once we look at the second chart, which is FDC, it's a very strong indication that the stock has come back into an overbought nature in terms of indicators. But even within the overbought nature of indicators in the second chart for, FDC, the stock is still showing signs that this uptrend is intact for the stock. So as you can see that whenever the stock has reached overbought nature in terms of indicators, that's actually resulted in the stock going into a consolidation. But that has not deterred the trend. In fact, the stock has been making pattern of higher highs and higher lows for years to come by. So I think that's one of the stronger reasons why I believe that this uptrend would stay intact for FDC. Even though on the short-term charts, the stock may take a pause because of that slight overbought nature of indicators. So again, a stock which should be part of your portfolio, but then a buy on dips could be a better strategy for FDC. And even for the third stock, which you were looking at, I think that was RVNL. Bank of Maharashtra. Now, interestingly, the stock has taken a major resistance at this 80 zone. So this is the last 15 years of charts for Bank of Maharashtra from 2008-9 to 2024 so far. But interestingly, the stock, after such a kind of major correction from 80 odd rupees towards a point when the stock was just about 10-15 rupees, and now it's made a comeback again towards that 50 mark, which means sooner or later the stock should come back towards a breakout that 80 mark and provide an all-time high as well as an all-time high levels. So very bullish on Bank of Maharashtra even from current levels. In fact, this dip should be taken as a good buying opportunity.
All right, so that's the take coming in from Kunal as well. All the three stocks is a deal according to him. Let's move on to the next one. Satya wants to know whether it's good time to go ahead and buy Indigo, keeping a long-term horizon in mind. He's also looking forward to a 25% minimum upside. The upside one, I will leave it to Kunal, but what about sealing the deal right now for Indigo or Interglobe Aviation? Mr. Chokilingam, what's your view?
We have a buy recommendation on Indigo. Very interestingly, despite two wars going on, one in Ukraine and other one in the Middle East, the oil price has fallen. Last Monday, it has cracked nearly 5%. And from 1 year high, crude oil prices are down almost to 22%. I think which is a big positive for airline industry. And in Indigo, all of us know it continues to maintain the leadership position. And thirdly, though it is a net debt company, it is still sitting on a gross cash of around 35,000 crore, which is quite unique for this company, which is very critical for airline industry. So this company is ready to, face all sort of uncertainties in the medium to long term also. And it is maintaining the leadership, and outlook for airline travel remains very robust for highly populated and middle class dominated and service oriented Indian economy. So therefore, I believe that 25% return is very much possible, if not in 1 year, maybe in 18 months to 24 months. But of course, OPEC, International Energy Association, all of them are projecting a lower demand for oil, and IMF projects a lower global growth. So these things to happen, then the oil price can crash even from current level. In such a possibility, it can even give, within 6 months also 25%, subject to possible further severe fall in the oil price. Otherwise, it's a great stock to buy at the current price.
What's your take coming in then on Interglobe Aviation? It's a deal coming in from Mr. Chokilingam. Is a deal for you too?
It's absolutely a deal from my side too, and very rarely a stock which has corrected 20%, I think finds a stronger bit of evidence on charts that the stock has formed a bottom. So now looking at this is the 200 weekly moving average for Interglobe Aviation, and over the last many years the stock has found support at this long-term moving averages. So we've seen the stock taking support every time the stock gets into a corrective phase and then starts off a very strong phase of a rally. So we've already seen the stock correcting from 5,000 to now 4,000 odd levels, which means at current levels the stock is not just attractively priced, but it's come back towards a reversion of the mean, which could be a very good point where the stock may start a fresh bull trend or an uptrend for itself.
All right, so that's the take coming in on Interglobe Aviation. Deal coming in from Kunal as well. Let's take the next one. Chandrasekhar is writing to us from Hyderabad. He wants to know if SBI is a good buy at current levels. Is it a buy or an avoid? Is it a deal or a no deal? Kunal, you go first this time.
Well, definitely a buy for SBI because again a stock which has completed that mean reversion phase. We've seen SBI being one of the strongest stock from the PSU banking lot on the large cap names over the last many years. Now, interestingly, the stock has come back towards a mean reversion. Look at the way the stock has just consolidated at this long-term moving average, and very recently is where you've seen the stock breaking out. Now, when a stock which is considered to be low beta, moderate beta, and a torchbearer for the entire PSU banking stock exhibits this kind of a behavior, it gives an indication that the stock has completed a corrective phase, a consolidative phase, and is now getting ready for a breakout on the upside. So a classical chart for SBI should not be a miss. In fact, definitely a deal.
Definitely a deal. Classical chart, a classic bank as well at that. Mr. Chokalingam, do you agree?
Definitely, it's a good stock to hold. Although as I mentioned, credit growth is expected to slow down from 16 to 12%, but still 12% growth on a very high base of credit in the industry is a big positive news for leader like SBI. And the Indian economic growth is also expected to be around 7% for another 1 or 2 years. So all this would augur well for SBI. Definitely, it's a buy on decline, hold for medium to long term. However, Bank of Maharashtra probably can create more wealth than SBI in 1 to 3 year time frame. But SBI also is a good to hold and good to buy if there is any decline.
To hold, good to buy if there's any decline. If you already have it, then you can continue holding on to it. That's the take coming in for SBI. Anand from Karnataka wants to know about Colgate as well as Arvind Fashions. Are these two companies a good buy afresh, as well as wants a long-term view on both? And he's very keen on long-term investment. Mr. Chokalingam, very keen on Colgate and Arvind Fashions. Do you think that keenness merits a buy or deal?
Yeah, I analyzed the Colgate. I think it's a good stock to hold and even to buy for a medium to long term. The results are really very good. In September, it has posted growth in profit and revenue, both on year and quarter-on-quarter basis, which is very impressive because we know how the urban inflation has affected entire FMCG pack. But this stands out to be quite unique in terms of relative performance. And not only that, I believe Colgate uses derivatives of oil as key inputs for packaging its products. So, as I mentioned earlier, the recent crash in the oil price is also positive, and therefore this is a good stock to buy and hold. And secondly, this Arvind Fashion, good stock, no doubt about it, but it has posted 10% growth in revenue approximately, and also in net profit. For that it is commanding a P of 55. That is where I have a little disagreement. If you are commanding a 55 P, I would expect the profit growth, if not at 55%, at least it has to be 30-35%. That's where it is lacking. So therefore, I would not recommend buying the stock. And one can even sell, and in case it corrects around 10%, then one can buy.
That's the take coming in on Colgate and Arvind. When you talk about the long-term perspective, the fundamental view, Kunal, your take on the technicals, deal or no deal?
Completely different charts. Colgate on one hand I think is a stock which I believe could probably correct further. The long-term charts are indicating that the stock is far away from its long-term moving averages at 3000 levels. The long-term average is at 2000, which means sooner or later the stock should try and coincide to that 24 to 2500 mark. I would believe that you should stay away from the stock, at least as of now. If you're a long-term investor, there could be better buying opportunities. Arvind Fashion on the other hand I think would be an interesting prospect. The stock has come back towards a mean reversion phase, and looking at the way the stock has exhibited, so there's been a volatility, but then within this volatility also the stock is exhibiting a pattern of higher highs and higher lows. Come back towards a very strong support territory on the 550 mark, 540, 550 thereabouts. So as an attractive price point, it's a deal for my side.
Alright, deal for Arvind Fashions, no deal for Colgate given the fact that the price that it is at currently. This one is the last query coming in from Tinku Bala. He's writing to us from Punjab. He has 2500 shares of Bandhan Bank at a price of around 213 rupees per share. Wants a fundamental long-term view. But before the fundamental view, let me take a technical view coming in on Bandhan Bank. How are the charts looking for this one? Because it is either marred by news or by earnings. And then you have a lot of moving parts when it comes to Bandhan Bank. This time the earnings were good, the stock actually soared.
Yeah, there's something on the other negative which keeps on happening into the stock price, and that's one of the reasons why the trend for the stock is still on the downside. So from a point in 2020 when the stock was almost at 600 to 700, the stock is literally tottering at 200 odd levels. Now the concern for the charts is this long-term moving average which you can see, and the stock has been trading significantly below its long-term moving average. So till the time this level is not taken out and the stock doesn't break past about these levels, I think you should stay away because this trend may continue for some more time. The breakout point for Bandhan Bank is around the 220 mark. So the moment the stock breaks past about 220, it then becomes a high confidence buy.
For now, it's a no deal coming in for Bandhan Bank till it doesn't reach those levels. Mr. Chokkalingam, quickly coming to you. Bandhan Bank, fundamentally, what's your take?
One may not make a big wealth because of the competition in this space has increased. And, as he rightly pointed out, Kunal, there are a lot of uncertainty keep happening. But however, to be fair, the stock has corrected a lot. After the correction, it is trading at just 1.3 times price per adjusted book value, which is really, one cannot ignore. And second, if you see in September, advance growth was around 23%, deposit growth was around 27%. Again, this kind of outperformance over industry growth, very few financial services companies have done it. So considering all that, and also considering the decent operating performance in September, and also the recent, the rule regarding its provision towards some of the lending, which was in favor of the bank, I would say that one can hold it for 1 to 2 years. Certainly, there is a possibility of significant recovery in 1 to 2 years in the stock.
Fundamentally, you can continue to hold on to Bandhan Bank for a period of 1 to 2 years. But with that, we come to the end of this edition of Deal and No Deal. Thank you so much, Mr. Chokkalingam, as well as Kunal, for joining us on the show and also sharing your insights with all of our viewers. With that, we come to the end of this edition of Deal or No Deal. Thank you so much, viewers, for staying tuned.
If you like this video, then like, share and subscribe to ET Now.